Christmas is done and the waiting is nearly over. If 2023 turns out to be anything like 2022, then we are in for a very volatile ride. This week, traders will return to their desks with one key question on their minds. Did Santa Claus deliver a shallow or deep recession for the global economy in 2023? We're certain to find out the answer to that question very, very soon. Hello and a happy new year to you from the team at ForexSignals. My name is Shain Vernier and this is your weekly market preview for Monday, January 2, 2023. We enter the new year with most economists forecasting a shallow recession in both the US and Europe. Prices are expected to gradually fall over the course of the year, with headline inflation expected to decline faster in the United States. The recovery in Europe could also be much slower given the impact of the Russia-Ukraine war and continued high energy costs. However, we still expect both the ECB and the Federal Reserve to finish their hiking cycles by the end of the first quarter. That means there's still some interest rates to factor in the price action. So let's scan through this week's key market drivers with our analyst Connor Woods.
So then, back to the charts for 2023. It is a relatively quiet start to the week. It is a bank holiday over in the UK. So although the London session may feel, I think, quite muted, you should be on your guard because we have Euro area and German purchasing managers index data to contend with. Now the market is looking to the optimistic side, expecting an uptick in the final December readings, but we may see some shorter term volatility. But we're going to have a look at the DAX, which is the German index over in Europe, and you can see that on the daily chart that we have here at the moment. Now if you get my drawings back up on the chart, you'll see where I'm going with this. This is the daily view because we're going to have sort of lower volatility maybe this week. Now you can see this is the overall picture for the DAX. We've reacted really nicely from this supply zone. If I zoom right in here, you can see we come in and took this liquidity to the top side here, and we've been trending down ever since. Now I was in a sell position from around 14,327, which is running quite nicely at the moment. Now you can see that generally speaking, I want to see a 15% fall in this index at some point, which is my sort of maybe 2023 ending point. So I'm going to ride it down all the way down. And you can see that on this daily chart at the moment, we're already ticking to the downside. If I move down onto the 4-hour chart, I do believe if we can get that break below 13,700, then we can maybe sell from a retracement up from probably around 13,866. But I do believe there's more downside in this coming, and it's just about getting that timing right. Okay, so moving on to Tuesday, German data is going to be in focus here. I think the European session on Tuesday is really offering up that rich mix with inflation, unemployment data. Now the market is expecting inflation to roll over, but with CPI still printing 10% over in Europe, the German Bund yield starting the new year on a high is an interesting point to look at for Tuesday. There's going to be much attention to how the ECB's hiking cycle is affecting borrowing costs in Germany. When we look at the 10-year Bunds right now, what I find significant about this daily chart, this isn't a market which has really taken liquidity and looks like it wants to go much lower. This is a market which for me has had a full body candle closure above this most recent high. So I do think that maybe we're down for, if I go onto the 4-hour chart, for a pullback maybe into this gap area we have. But this is something we can use as a confluence for other trades, because I do believe that we may get something that looks a little bit like this, and I do think we could go and touch that 2.7% on German 10-year Bunds in the fairly near future. Now then, moving on to Wednesday, I do believe that's going to be when we could start to see things kicking off a little bit more. Now the US starts the trading year with prints for mortgages, ISM manufacturing PMIs. I think many are expecting quite a meaningful drop in US housing activity as that recession starts to become much more of a reality. The housing data will be critical in understanding US markets in the first few months of this year, with the 30-year mortgage rate sliding from 7.1% in October to 6.3%. The direction for buyers is correct, but it's easy to forget that borrowing costs for the US consumer are still at levels we've not seen since 2001. And also, we need to pay attention to the FOMC minutes. So we're going to get quite a lot of potential volatility coming in on Wednesday, especially when the UK gets back into action fully as well, and everyone's back in the swing of things. So I want to look at the S&P 500, probably my favourite market to look at the moment. If I get my markings on the chart, you can see This move played out perfectly from this trend line we had in 2022. I'm going to keep that there throughout all my analysis just to give me a reminder of what the general picture is. Supply zone here reacted really nicely, wicked into the 4-hour supply zone, trading down ever since. Really, really nice play. But you can see that I had this demand zone mark, this previous sell to buy candle, which acted as support over that Christmas period. But potentially, what I'd love to see now, as we've had this reaction, I'll keep it there in case it holds, but my favourite play is up towards this imbalance level, around this 3930, 3940 level, before we get a huge risk off play. And I do believe there's a lot more room to go in this S&P 500 market to the downside. So let's see how this plays out. Maybe on Wednesday we're going to get a bit of a new year bounce up towards 3940 before that slump. Okay, so moving on to Thursday, our key market's going to be this USD CAD market. Now, net exports have been falling from the Canadian economy since the summer months, and as the Bank of Canada is reaching the end of its hiking cycle, the loonie, I'd say, has struggled to stay under 1.34 against the US dollar, with many believing it has further to fall, potentially. But today's balance of trade data will be a key factor in understanding if CAD weakness will continue into the first quarter of 2023. Now then, when we look at the daily chart on USD CAD, let's get my markings on the chart. For me, I do believe that we're starting to see some sort of momentum shift and that the USD CAD potentially could start to turn around. However, for me, there's clearly equal highs here, which is key liquidity targets. And also, if we can get a move at the same time, which goes up and takes this liquidity from this equal highs into this supply zone, I do believe we're going to potentially trade a little bit lower, and we could have this daily gap area in mind as a target, because we did react perfectly from there before, so we may get some support here, but the move has already happened, which was a really, really nice move. However, my favourite play is for USD CAD to continue marching higher, just towards maybe this 1.37 level, a little bit higher, 1.3713, then to move lower in the next coming months. Finally, on Friday, all eyes, of course, are going to be on December's non-farm payrolls data. Now, the market is forecasting actually a drop in job creation for the world's largest economy of minus 63,000 for the final month of 2022. All central bankers have been highlighting how tight the jobs market has been. It's not been a surprise, and a meaningful drop in the NFP print could signal a softening in the jobs creation to prove that the interest rate hikes have started to bite. We'd expect the dollar to soften as a result, and when we look at Euro USD, it's kind of showing here how we can just see this general grind, and we can see it in this RSI indicator as well, this general grind in Euro USD to the upside. There's a couple of times, this is a daily chart, where we've tried to threaten to break a little bit lower, but we've just been printing higher lows as we go. And if I look at the price action that we see right now, this is a market, looks to me, that wants to extend to the upside. You can see I've got this area of resistance in here. I do believe that a key high for Euro USD is this 1.07884 level. If we can get a break above there, a full body candle closure above this high, I do believe that if we look at some sort of retest, we can go and unlock levels a lot higher, maybe starting around this 1.0987, especially when we look at how hawkish Christine Lagarde was in her last conference. Interesting times here for Euro USD.
So, with a rich mix of European inflation data, balanced trade figures, PMIs, and important jobs numbers, we have much to sink our teeth into for the first trading week of the year. One thing is for certain, our team of analysts will help you navigate the financial landscape every day in the trading room over the coming 12 months, ensuring that you have all the best insights, valuable information, and the most comprehensive trading education available. We'll help you make the most informed trading decisions and be with you every step of the way. The slate is clean and there's everything to play for. Welcome to 2023.